Hey, everybody. Welcome back to Tech Tune Up. It's April 9, 2024. And as always, we have some interesting stuff in the tech sector to share. Of course, we are brought to you by Benzinga here on our YouTube channel. And I manage a tech portfolio for these dudes over my shoulder, Harvest Portfolio Management, where I am today down in the bayou in Charleston, South Carolina. So let's get right into it. My first stock I want to talk about is a follow-on of one of our short ideas. This is the company spearheaded by our former president, Donald J. Trump. No surprise, that's the ticker symbol. This is Truth Social. And we made this short call only a couple of weeks ago. And since then, the stock is down 50%. It's been an unmitigated disaster, but a big victory for short sellers like us. But anyway, the revelation that we couldn't share last week that we're sharing this week is taking a deep dive into the company's corporate governance. And what I mean by that, how is the company structured and how are the executives compensated? Because I will tell you this, when you see what triggers executive bonuses, then you'll know exactly how the company is going to be run. And anyway, even though Trump is a 58% shareholder and not a day-to-day executive at all, he had a big slew of stock-based compensation, egregious compensation by the other three top executives. This is what we call a corporate governance nightmare. Continue to short this stock if you're able to borrow the shares, which is actually tough. Next thing I want to speak about is Spotify. You know, Spotify is how I get music. And one of the things I've noticed as a subscriber and the information I read on the company as an analyst is they're really leaning in to AI tools to take even more share away from Apple Music. So stay tuned here. This could be a real interesting play and a very interesting case study if it is successful for AI. Next, there's a bunch of news, no surprise, on Alphabet this week. First of all, Alphabet, it started today and it goes for 2 more days, is having a Google Cloud event, which they're talking about, of course, no surprise, all of their AI capabilities. And one of the things they announced today is with one of my buy-listed semiconductor companies, Broadcom, ticker symbol AVGO, they're trying to develop their own AI chip. And why would they do that? Well, when you go to Nvidia and AMD, you might have to pay $30,000, even $40,000 for one of their chips. So yes, there is a very strong temptation to keep your costs down to develop your own. Now, today, that news has knocked down Nvidia's shares a little bit. Nvidia's down 3 or 4%. I don't think that they're going to be able to even get close to NVIDIA's capabilities over the next few years with any internally developed chip. So I don't see this as necessarily a positive for Alphabet, and I definitely don't see it as a negative for NVIDIA. So it's probably a buy today. I'll get to that in a second. The other thing I think is interesting is it's rumored that Alphabet is going to buy HubSpot. And think of HubSpot as a software company for business collaboration, marketing, and sales. This would be an indication of Alphabet, which has really been a consumer-focused company, to take a deeper dive into the enterprise. We'll see if it succeeds. We'll see if that transaction is actually done. The next thing I think is very interesting is Alphabet is going to charge for what they call a premium search. And premium search is different from the search results you see today because they're going to be driven by AI. And that is really, really interesting because there is no business model in tech and almost anywhere on the planet Earth that is profitable as digital advertising. And so, you know, when you search on Google, right, you're not paying for that. You're not subscribing to that, but you are being fed a steady diet of digital ads. So what happens if under AI, Alphabet and other competitors are forced to transition to a subscription only, what we call a driven model for search, rather than the old, what we call freemium model driven by digital ads. This really could be, if it is successful, a real sea change for Alphabet, not only as a revenue enhancer, but also a threat, and probably more so a threat than a good thing to their business model. So we'll see. It's going to be another AI test, and we'll see what is the take up by consumers. Could be very interesting. Some of these tech titans with this technology disruption may not be tech titans in a decade or 20 years from now. So with this, at least slight controversy, I have been off Alphabet for some time. I own it for clients. I own it myself, but it hasn't been a fresh buy for me for almost as long as we've had this program, last couple of months. Next, I think this is interesting. Alibaba, as you may know, is, let's call it the Amazon of China. Now, what they're doing is significant, is they have a cloud hosting business, just like Amazon Web Services, just like Google Cloud, just like Oracle Cloud. And what they do is, they charge for essentially outsourcing their data centers. And here's the rub. They are drastically lowering prices by over 20%. And they're taking that disinflationary pricing model out of their home base, and they're going to take it abroad. So for a long time, we've actually had with the essentially oligopoly or maybe biopoly we have in the United States, have had pretty firm pricing for cloud services. What happens if Baba, even though it's pretty far down the scale as far as market share, really pressures the industry, not just in China, but here in the United States with lower cloud pricing? That could be a shakeup. I don't really care about Alibaba. I have long ago decided it's too tough to invest in Chinese tech stocks because at any time the government can take them to zero. But this is a watch item for all of the US cloud players that I mentioned. Next, this is kind of interesting. TSM is Taiwan Semiconductor, and you'll see I've just added it to my buy list. But they were just given a $7 billion grant from the Biden administration, from the CHIPS Act that was signed in 2022 to build another fab. And in semiconductor manufacture, we call a fab, it's a fabrication facility. It's where they build chips. And this is going to be in the Phoenix, Arizona area. And they're already building 2 other fabs. So this one will be number 3. So we'll see what happens. The other thing that's very interesting is Samsung. Samsung is a South Korean company, and Taiwan Semiconductor is a Taiwanese company, and SK Hynix is another South Korean company. They are all building chips in the United States, and they're all being sponsored by Biden's 22 CHIPS Act. So at the end of the day, we will onshore semiconductor manufacture. We will bring it from abroad back to the United States. But, the bulk of the manufacturer and the bulk of the Act funds will not go to U.S. companies. They will go to the likes of the Taiwanese and the South Koreans. There's really only 2 major semiconductor companies in the U.S., Micron in memory and Intel and microprocessors, that are U.S. companies that will get any of this money because they still plan to build here in the States. So we'll see. As I take a look at what else is going on at Taiwan Semiconductor, that since we last met, there was a 7.4 Richter scale earthquake in Taiwan. Now, luckily, it was on the other part of the island from where Taiwan Semiconductor builds their chips, because you got to root for them. And the reason you have to root for them is they essentially have a monopoly in the high-end chip designs. For example, all of Apple's chips, all of Nvidia's chips are manufactured by Taiwan Semi. And you could see when the news broke that day that there was a significant earthquake, there was a lot of worry here in Silicon Valley in the US. So it goes to show you, until further notice, how important Taiwan Semiconductor is specifically and the island of Taiwan for U.S. interests, particularly in tech. Next, let's take a look at Micron. Micron is my favorite tech stock. It's been my favorite tech stock for a couple of weeks. Bright green on my fresh money buy list. And I reported a couple of weeks ago that they had a great quarter. Talked about being at capacity, booked up from customers for their high bandwidth memory, which is critical for AI, all 24 and all 25. And so that was good news. And the other two players in the industry also gave very bullish indicators. One is Samsung, saying the same thing about their business, South Korea. And the other one is, who I just mentioned before, SK Hynix, another South Korean company, all talking about voracious demand for memory driven by AI and not enough supply, because those three companies control it. Next, I think this is interesting. Your ever controversial friend Elon Musk has a outfit called XAI. I don't know if you remember this, but Elon Musk himself was actually one of the original funders of OpenAI, which released ChatGPT in November of 22. He had a falling out with his co-founders, and so now he's created a company to go after them. And it's pretty serious because they're on the road with a fundraise. And so you'll see some people in the camp of OpenAI, which is 49% owned by Microsoft. Maybe some people focus on Musk's XAI startup, particularly because they're going to try to probably raise hundreds of millions, if not billions of dollars, to be determined. Keep an eye on it. Next, I always poo-poo on this program legacy media companies, things like Paramount Global, Disney, all of them. And what do I say? And I'll say it again today. If you want to buy video streaming, if you want to capture 21st media, just hold your nose and buy some more Netflix. All these other companies are pretenders. So Paramount Global, ticker symbol PARA, is about to be acquired, or at least instead of acquired, maybe some kind of weird mashup. I haven't seen anything like this in mergers and acquisitions. And again, I talked about at the beginning of this segment, corporate governance. This is a transaction that will enrich Sherry Redstone, which her father, Sumner Redstone, funded this company. But it's going to be bad for shareholders. This is a short, maybe after the deal is consummated, because I think it's still going to remain a publicly traded company. I don't think you pull the trigger on a short when it's about to be acquired. But when the smoke clears, this company is a bag of you-know-what. Next, Nvidia. There's always news on Nvidia. They announced that they're going to spend $200 million to invest in a artificial intelligence center in, of all places, Indonesia. Indonesia usually doesn't come to mind as a tech powerhouse. But here's why we care about Indonesia, and this is probably a good deal, is because Indonesia still does have 276 million people. Very significant. We'll see what happens there. But I would say, even for Nvidia, a very large company, $200 million is a significant investment. The next, we have a further deterioration in the business of EVs, electric vehicles. Ford was the latest to say it's pulling the plug, at least on its overwhelming focus on EVs, and they're going to retrench, recalibrate, and come back with hybrid vehicles. Now, hybrid vehicles are in demand. Toyota Motor, ticker symbol TM, has been the best global auto stock over the last year or so. Why? Because they're all in on hybrids. And so that is the way to go. And so Ford, which has a languishing stock price, is trying to take a page from Toyota Motors' playbook and focus on hybrids instead of pure electric vehicles. The next thing, and I think this is disappointing, I think Intel, even though it's a U.S. tech titan, one of the few U.S. companies that actually manufactures semiconductors on our shores, They have been rapidly trying to build an outsourced business where they build these fabs like Taiwan Semi is doing in the Phoenix, Arizona area. And then they take designs from other companies and just do the outsourced manufacturing. Now, they recently broke out their business, their outsourcing business, and wow, it really surprised on the downside. It looks to me like they are so deep in the red that Intel's outsourcing business, I bet, does not become profitable until 2030. So 6 years out to profitability. Would you wait on that? I wouldn't. Would you have that as a driver to buy Intel? I wouldn't. That is actually, I think, pretty bad news. Next is Palantir, a stock that I love to hate, and I've mentioned that, but they do have just announced a tie-up with Oracle, of all things in AI. Of course, everybody wants to PR that, but we'll see what happens, because if a Palantir in cahoots with Oracle, even though the CEO of both companies is half Carnival Barker and half CEO, there actually could be something here. I'm going to keep an eye on it. Amazon is firing some folks. And when you see somebody firing people in mass, obviously not a good sign. So this has me a little bit worried about Amazon Web Services, which is their cloud outsourcing business. Remember, I told you that if Alibaba continues to cut prices abroad, step out of China, compete with Amazon and the others here in the States, that could be a real negative. Well, we might be seeing it right here. Amazon Web Services, which is the key business for Amazon, which has the highest profit margin for Amazon, even much more than its e-commerce business, has been firing not people in the thousands, but people in the hundreds. And I'm keeping an eye on that, because if things were healthy, they would not be doing that. All right, the last stock I want to talk about is Robinhood. You know, this is the company that allowed people a couple years ago to trade meme stocks. It's actually been another corporate governance nightmare, a big, big, big disappointment. And I just think this is funny. It's kind of a tongue-in-cheek story. They are now going to go in the credit card business, which for forevermore will be dominated by the likes of Visa and MasterCard, so don't even try. But they have a gold card, and not a gold card like American Express, a gold card like made of gold. What a bonehead move. This is just a PR shenanigans. Anyway, Robinhood on my continued list of stocks I love to hate. All right, well, let's take a break and come back to my tech pick and pans. What I'm trying to do here, picks first, pans second. But even within my picks, you know, sometimes you have a stock that's a great long-term buy. I got a long-term confidence. You know, strategically, I think I'm right, but tactically, I may not be right. And so what I do, even with my tech picks, the yellow colors here are stocks that are on the Meeks Tech Picks list, but I have them in kind of the hold mode. Don't buy them with fresh capital today. However, the ones colored in green, I would buy today, right here, right now. So let's go through them. My cybersecurity pick, CrowdStrike. I'm kind of in the holding pattern. I've mentioned it many times before. The memory chip titan Micron is not only green here, it is my favorite tech stock, bar none. T-Mobile, let's wait and see. Then I have a string of stocks that I'm willing to buy right here, right now. Microsoft, Meta, Amazon, even though I have a little bit of worry with those couple hundred people that have been fired over at Amazon Web Services. Synopsys, the electronic design automation software company, and Nvidia. This is kind of interesting. I asked our director to change, right before we went on air today, my Nvidia color from a yellow hold pattern to a green buy. Why? Why do I think Nvidia is buyable right now? Is I had an $850 buy limit for that stock. And it actually is down quite a bit today, $20, $30 to $843. So yes, it hit my buy limit and then some. So yeah, Nvidia is not a hold. Nvidia is a buy. I got NICE and AIC. They're kind of value plays, but they're in hold mode. Broadcom, I like. Remember, I talked about the the deal they have with Google. Mercado Libre, I only buy it at about 14.50. Duolingo, same thing, hold pattern. But I do like Dell on the buy side, and Dell is very attractive today because it's down quite a bit as we speak. And also, no surprise, I'm adding the most important semiconductor company on the planet Earth, which is Taiwan Semiconductor. The guys, until further notice, manufacture over 90% of America's most high-end semiconductor designs, and those are the chips that are found in AI applications. So now let's take a look at the tech pans. All right, tech pans, red, stop at the light. Get out of these things if you have them. If you have a chance, maybe you could even short them. Reddit, I spoke about the continued travesty that we call Truth Social. Shouldn't even be a publicly traded company. Last year, only $4 million in revenues and losses of $58 million, and egregious corporate governance highlighted by egregious salaries paid to one Donald Trump, not even an executive at the company, and the top 3 management team. And then Tesla. Tesla got a little bit of life because Musk has announced on August 8th, they're going to introduce the robo-taxi. I think this is much ado about nothing. Why? Because the first time he introduced the robo-taxi was 5 years ago. And here we are, 2024, nothing. What are they going to do? Announce it again? And the other thing is, why would you make an announcement on April 8th that you're going to make an announcement on August 8th? Really? This is just fluff. And the reason that they're trying to spin positively this PR announcement, I think it's just that, is because in recent weeks they've come under pressure because it looks like they're pulling the plug on their model that was supposed to be sold to the mass market. Because you know that Tesla has a very large market share, particularly in the States, of the high-end EVs. But the criticism is they won't be able to boost those numbers after saturating the luxury market because they don't even offer a low-price car. And it looks like that is very difficult to produce profitably. And they're reining in their budget on the Model 2, their low end. And so if you have some bad news, which is that, and that's really bad news, you want to offset it by some BS good news, which is this August 8th, we'll make an announcement about the robo-taxi. I think it's BS, to tell you the truth. All right, let's get into tech trends. You guys continue to watch interest rates. We don't like being macroeconomists. I'd rather talk.
Paul, you there?
Hopefully we're back. Sorry about the tech glitch. How can you talk about tech stocks and have a tech glitch? Anyway, we're getting into tech trends. I told you it's important to keep an eye on rates. 80-20 rule. 80% of the value of tech stocks is the level of interest rates in this country. Only 20% is all the cool fundamentals that we talk about, like AI. And so we have another inflation gauge being released by the Feds tomorrow. It's called the Consumer Price Index. And what's happened recently with all the inflation gauges, and the Federal Reserve Board, our central bank, prefers the core PCE instead. It's called the Personal Consumption Expenditures. And as long as those inflation numbers stay sticky high, and as long as the U.S. job market is so strong that it drives wage pressures, which drives inflation, the Fed will not, with its monetary policy, be able to turn around and lower rates. And this is probably the biggest threat that we've seen in tech. And you take a look at a example, the yield on the U.S. Treasury 10-year note, which most people like me like to call the risk-free rate. The yield on that security today is 4.4%. If it rises 40 basis point to 4.8%, where it was in October of last year, unfortunately, guys, we're going to have I don't want to say tech wreck, but we're definitely going to have a correction in tech stocks. That's the thing I'm most worried about. I'm a professor at the Citadel Military College here in Charleston, South Carolina. And I introduced to my students yesterday a very cool tool to watch the Fed and rates, just like you should do. It's the CME's Fed Watch tool, obviously free online. But what they do, and here is an example of the expectation for the next meeting in June, is they give odds of the level of interest rates at these various meetings. The Fed meets to talk about monetary policy about every 6 weeks. And this is great to know because the market doesn't move on what happens. The market moves on things that are either better than expectations or worse than expectations. And in this case, better than expectations would be lower interest rates sooner, and worst would be rates going up or staying at this elevated plateau. So check out, here it is on the screen, the CME Fed Watch tool. The next thing I wanted to talk about in trends is you may know that our Treasury Secretary, Janet Yellen, is in China right now. She's been in China for a week talking tech, I'm sure, but the real dicey relationship, particularly economically, between these two superpowers. We're number one GDP, they're number two. I don't know, guys. It's got to be resolved. This is a bad thing. And the problem is the Chinese have had an economy that is stalled with its growth. And so what they are trying to do is export their way to growth. And the only way they can export their way to growth is to overproduce. And when they overproduce, they flood the world's markets with low-cost goods. Might be good for them to get a growth cooker. It's going to be really bad for us. And so obviously Yellen knows this. Obviously she's trying to point this out to her Chinese counterparts. But stay tuned. This could be particularly bad. All right. And now I do want to talk about a few tech collaborations, which I thought were interesting. Remember, no matter how much you believe that we should do everything that's patriotic, and in many, many moons. And also, separate announcement, the US and the UK are going to collaborate on AI safety. Again, a pretty rare geopolitical combo. And we'll see how it goes. Other things, Jamie Dimon, who is the CEO and chairman of JP Morgan, he is a well-known procrastinator, right? What he says, everybody listens to, particularly in my world. He, even though he's the CEO of a bank, he's not a tech guy, has talked about in his latest shareholder letter the power of AI. And if Jamie Dimon is noticing it, then I have even more confidence that AI is going to be a thing. The last thing I wanted to mention, I think this is pretty cool, is there have been some announcements made that we are going to start to manufacture more in Mexico. Now, of course, we've been manufacturing in Mexico since NAFTA was passed in 1994. However, because we're so worried about the supply chain and the deteriorating relations, particularly with the Chinese, instead of snapping together pretty low-end products in Mexico, we are now going to bring some semiconductor manufacture and some manufacture of high-end products, sophisticated stuff to Mexico, just to get them out of China. This could be super interesting because obviously we'd love to see them succeed because you really improve the supply chain because they're so close. We'll see with all this tech gear being manufactured in Mexico if this becomes a thing. Right now, it's kind of an experiment. I hope it works. But anyway, those are the tech trends. And come back. We're going to take a hiatus next week. Come back the week after, and I'll have 2 good weeks of stuff to talk about. Anyway, we'll see you next time.